After a fairly strong day trading on Thursday, global share markets fell on Friday's afternoon's trading, with US, European and Asian share markets all falling. Much of the focus for investors was once again on the tensions arising out of Korea, some of the new measures being introduced in China and of course the debt situation in Europe. US retail sales in Friday's trading were also a bit lower than most were expecting. Black Friday, which is typically the best retail sales day for US retailers for the whole year, saw increases of only 0.3% on last year levels. The weak equity markets has also seen the currency drift lower, and now we are trading just over 75 cents against the US dollar, but at 48.10 against the Great British Pound. Through till the early part of November, cotton had been the strongest performing commodity right through 2010. However, since that time, prices have fallen by 26%, and on Friday they did see another weekday's trading. Prices peaked at 152 US cents per pound, but the nearest term contract is now trading at 111 cents. We are predicting that prices may settle a little bit lower than this, but they should average between $1 and $1.10 per pound. Demand in the Chinese market is likely to still outstrip supply, so this should be a strong fundamental for cotton over the next year. However, the recent drops will likely have an adverse effect on wool prices here in New Zealand. I wouldn't be surprised to see some drops from the recent levels we have been seeing, but for wool prices to settle at levels that have been higher than over the last couple of years. Now that we have Thanksgiving out of the way and most consumers have had their turkey fixed for the year, I wouldn't be surprised to see an increase in demand for beef through the end of 2010. This is what we are starting to see with US imported cow and bull prices increasing over the past 7 days. Supply remains tight in the US market. Their recent cold storage report does indicate that beef in cold storage has picked up over the past 2 months, but on an average basis, cold storage of beef is down about 7% on last year levels. This should mean that US beef supplies will remain tight through a period when slaughter is usually down in the US market. This should provide a good positive boost for the New Zealand schedule prices through this year. We are still picking that despite the high New Zealand dollar against the US, we will see average beef schedules be about 10 to 15% higher than last year levels.